academics, GRE, TOEFL, GMAT. These are some of the competitive examinations that are taken worldwide so that the student can get into a university of choice. Similarly, globally, a listed company, if it wants to raise capital, it would need the blessings of either Moody's or S&P or Fitch, the three credit rating agencies. Learn more. The United States has literally captured the minds and markets of the world. From Princeton, New Jersey, the Non-Profit Educational Testing Service, or ETS, designs exams like GRE and TOEFL that assess students in more than 200 countries. These tests are delivered through licensed centers, and the revenue is reinvested into research and education for non-profit. Their scores are trusted by universities across the globe, setting a common benchmark for academic merit. Meanwhile, on Wall Street in New York, three for-profit giants, S&P, Moodys, and Fitch, perform a similar role for capital. Though a few dozen offices only exist in key financial hubs, their credit ratings influence how companies and governments in over 130 countries access funds and determine their borrowing costs. Hence, one system grades aptitude, the other grades creditworthiness. One opens doors to classrooms, the other opens doors to capital. Together, they define who qualifies and at what cost on a truly global stage, proving how the US has standardized both education and finance worldwide. A student in India might take the GRE not just to study in the US, but to get into IIT Delhi's MBA program or ISB Hyderabad's management course, both of which accept the GRE scores. So, while the test is designed in Princeton, its results decide admissions in Indian classrooms too, showing how US academic standards now influence education even within India. A similar scenario is acceptable globally. Now, let us take, for instance, a bank in India, say ICICI, wants to raise capital. Let us define the type of capital. ICICI may want to raise domestic bonds, which are rupee denominated and sold mainly to Indian investors, or it might want to raise international bonds, which are dollar or euro dominated, sold in the global markets like London, Singapore, New York. ICICI issues international bonds, say USD bonds, for which it has to approach one of the big three CRAs. ICICI, the issuer, engages one or more of the big three, say S&P Global Ratings, Moody's Investor Services, or Fitch Ratings. These agencies all have registered offices or subsidiaries in India. But the rating process follows global standards set by their parent headquarters in the US. Step 2, ICICI will need to provide data and disclosures. ICICI submits detailed information, financial statements, capital adequacy, loan portfolio quality, governance, and risk exposures. The CRA then conducts meetings with the management and analysts to assess the creditworthiness. Step 3, it receives the rating. The CRA assigns foreign currency rating for USD bonds and possibly a local currency rating for INR instruments. Example, Moody's Baa3, which is stable investment grade. S&P gives BBB, stable investment grade. These ratings tell global investors how safe the bond is perceived to be. Step 4, using the rating in marketing the bond. This is the most important aspect and purpose of the rating. The rating appears in the offering memorandum and prospectus. Investment banks and institutional investors across Asia, Europe, and the US rely on these ratings to decide whether to buy and at what yield should they hold the bond. Step 5, there is periodic surveillance. The CRA monitors ICICI's performance and macro conditions. If its fundamental improve or deteriorate, the CRA can choose to upgrade or downgrade the rating, which will hence affect the future borrowing costs by ICICI. Hence, if ICICI raises capital domestically for rupee bonds, ICICI also interacts with Indian CRAs such as CRISIL, ICRA, or CARE, each of which is affiliated with or part owned by the big three. For instance, CRISIL is held by S&P Global as a majority owner. ICRA is Moody's corporation shareholder. Indian Ratings and Research is a part of a subsidiary of the Fitch Group. Hence, even within India's domestic market, US credit ratings DNA is deeply embedded. To sum it up, just a student in India takes a Princeton-designed GRE to qualify for an Indian Institute of Technology or Indian School of Business program, an Indian company like ICICI must obtain a New York designed credit rating to qualify for investors' capital. The examiners differ. ETS grades knowledge, CRAs grade credit. But ultimately, both determine who gains global access.
In the next section, let's look at the brief history of the origin of credit rating agencies, as well as what does it take for a body or a company to start its own credit rating agency. Stay tuned.